According to the International Monetary Fund, currency depreciation is a deliberate downward adjustment in the official exchange rate, which reduces the currency's value when market forces generate changes in the value of the currency. On our business program, Portfolio Manager AfriInvest West Africa, Mr. Babajide Atolagbe, shed more light on the importance of the central bank and, of course, federal government's unification policy across the board.
Policies are not cheap, right? They come with some, effects that has to, be taken by, the general public before we can begin to see the positive side of the policy. And the case in point is the, the FX situation in Nigeria that we're speaking of currently. I mean, following the attempt to unify the market into one single market, right? Is the CBN devalued the official exchange rate from about 416 about to about 760, 770 band, right? And this adjustment was, done in order to unify the market and then put the market closer to put the exchange rate closer to what the market is basically pricing it at. But we've seen a situation where after that policy has happened, the parallel market has gone further in terms of moving from like 790 naira to about 890, 900 thereabout. And this is simply as a result of the supply-demand imbalance.
Mr. Atolagbe there speaking around the hike, of course, the dollar against the naira. Moving on, the stock market surges to close the week's trade in positive territory. The index gained 0.18%, helping investors to discern gains on their portfolio holdings. For deal gainers, the window opened for Sky Shelter Fund PLC, Computer Warehouse Group, GlaxoSmithKline, Computers Consumer Nigeria PLC, the Initiates PLC, and Cornerstone Insurance. Heavy price losers were Nigerian Enamelware, Veritas Capital, Assurance Prestige Assurance, RT Briscoe, and Mutual Benefit Assurance. And away from that now, Asian stocks hit a one-month low and logged a weekly loss today, while the dollar headed for a month of gains after U.S. inflation came in steady without surprising on the low side. U.S. stock futures were flat and European futures fell 0.5%. MSCI's broadest index of Asian Pacific shares outside Japan was down 0.7%, with stocks in Hong Kong and China the biggest drag. It was down 1.6% for the week, while broader Hang Seng fell 0.6%. Now, following President Joe Biden's move to prohibit some U.S. technology investments in China, U.S. investors are worried that Beijing will retaliate or pull back from buying American technology. This move by President Biden is aimed to protect national security and prevent U.S. capital and expertise from aiding China's military modernization. Experts say this is unlikely to extend to passive investments in public Chinese stocks, also whether China will strike back as it has in the past. In response, China's Commerce Ministry said it was gravely concerned and reserved the right to take countermeasures.